Hello everyone, this is Tomo for the Market Zone, and this is a new weekly market analysis video. What you're seeing right now is the S&P taking a nosedive into the 38.2% level, which is the first target zone of the daily Gartley pattern I mentioned about a month ago in my weekly market analysis newsletters. Yes, we are reaching target 1 and the 2000 level is just below it, a major structure support. And now I have to admit I was kind of surprised from the price action this week, a week before FOMC meeting, December's FOMC meeting, where the Fed is supposed to raise rates for the first time in 9 years. I was expecting some consolidation, but oil prices drove the market all the way down to target 1 into the strong support zone of 2000, which will be tested next week on Wednesday when Yellen will let us know what the Fed decided to do. Now there are still about 30 minutes to go before the close when I'm recording this video, and it will be interesting to see where S&P will reach and how the price will reach and react to the 38.2 reversal level, the first target level of the bearish Gartley. People will probably take profits that can make intraday reversal. I'm not expecting much. We are talking about a 2% decline in S&P today, maybe some correction towards the end, but this trading zone, this buy zone, potential buy zone, is definitely something to monitor next week on Wednesday, when Yellen and the Fed will tell the world what they decided to do with the rates. If you read my weekly analysis last week, I mentioned that I see several reasons why they won't raise rate this FOMC meeting, but it's just speculating. I see we saw the ECB with more stimulus action. We saw the New Zealand central bank cutting rates, so I can't see why the Fed will go against other central banks. I even wrote about it on my blog marketzone.tumblr.com. I mentioned that there's a message sent to the Fed from the central banks, and if they won't raise rates, we'll probably see the dollar continue to fall and the stock markets bouncing perhaps towards a happy Christmas, happy end of the year. As you can see, the market's reacting to this 38.2, but again, it's still very early and I don't expect much. If we'll take a close look at Euro USD, what we see is that this pair reached the final target level of my bullish setup, mentioned here in TradingView and on my weekly market analysis, of course, the newsletters, the weekly newsletters. The setup that mentioned the 1.05 support zone and the breakout of a small wedge we had here. We traded this pair to the upside in the elite zone, collected about 400 pips last week, and waited this week. We didn't trade the USD, we waited to see whether it will reach the 1.1 and then monitor it for potential selling opportunity. And now there's no reason to sell Euro USD a week before the Fed's decision that will impact the dollar, but that's definitely a zone to focus on next week if you want to take a continuation trade on Euro USD towards completion of the crab pattern here. That's for the case that they will raise rates and the dollar will rally, and if not, if we'll have a surprise or for some reason the dollar will continue lower, to break out and retest this uptrend line, broken uptrend line near 1.12, 1.13. So these are the two scenarios to focus on next week on Euro USD, and the zone is 1.1, 1.11. This is a small zone to monitor. Next is GLD, gold with a weekly setup. I mentioned on my weekly market analysis and on TradingView. Weekly AB equals CD pattern, weekly harmonics, and the price created a very nice outside bar, weekly outside bar last week, and today an inside bar. This week inside bar, and I expect continuation at least to test this bottom trend line of the trading channel that GLD was trading inside. This is the risk reward for the weekly position. You need to risk about 2.5% in order to gain about 10, which is a great risk reward. But first we need to see the price climb above this trading channel and actually creating a weekly false break. It still didn't happen, but I guess that based on this price action patterns, there's a good chance that we will see it. This is also something that will be affected by the Fed's decision, the dollar impact. Gold should rally and reach at least towards the final target level is this 50 SMA line weekly. Now let's look at the hottest topic in the financial market this week. Energy sector, oil prices, with crude oil breaking below $40. A major structure zone there, a major support zone that was broken, and now oil is testing the 2008 lows, and energy sector is testing a very important support zone, daily support zone, $60. I mentioned in my previous analysis for XLE, I mentioned this head and shoulders pattern that reached final target level, a very nice bearish setup we had here, and now oil is presenting potential bullish setup. I know it sounds crazy, but bullish setup, for those of you who trade harmonics, that's an aggressive C move, an aggressive potential C move where you actually buy the C point in order to trade the upside towards the completion of this bearish bet near $80. Now that seems very crazy setup, but for now what we see, if you don't want to use harmonics, you have a triple bottom here in a very strong support zone after a brutal crash in oil, and we can see a potential pullback maybe towards this zone, this 65 support, what was support zone now is a resistance, towards 65, or maybe even towards the downtrend line. Anyway, $60 is the buy zone. You need to place stop loss below 58 to make sure that you will be protected below this spike here. And if you trade harmonics and you want to consider it an aggressive C move, this is the final target level you should aim for longer term position holding. XLE, very interesting bullish setup following a brutal week for energy sector. The last setup I wanted to show you is a setup I sent to the Elite Zone members, the stocks group. And those of you who don't know, the Elite Zone is a premium service provided by the Market Zone, which I send the members a weekly trading plan, whether it's for Forex and stocks. We have two groups. This was part of the weekly trading plan we had in the stocks group. Bullish setup, just like I just showed you on XLE, an aggressive C setup when you buy the C point and expect the price to reach the completion zone of the bearish bet we recognize here. This was part of the setup. The entry point depends on how aggressive you want to be, whether you want to buy right here at market near 48 or just wait for confirmation when the price will close about 50. I provided the different trading scenarios as part of my trading plan, and either way this trade generated about 10%. Very nice, the completion zone here. I didn't short here, which was a natural thing to do. because I didn't want to be exposed over the weekend before FOMC. But now we have a bearish setup on PLC. If you want, we have a trend line also here. So if you think that PLC is heading lower, you have a setup for it. But this was this week bullish setup that generated profit despite the market's meltdown. And this is what we do in the elite zone. So if you're interested in harmonics, and if you're interested if you like the market zone analysis that I'm posting here on my blog, or on my weekly markets analysis newsletters, please join us. You can do it by going to themarketzone.net. Just press the elite zone tab here, and you can subscribe, whether for the monthly subscription or for the 6-month subscription. When you get 15% discount, you can choose whether you trade Forex stocks. And if you want to join both of the groups, just email me and we will work something out. I have a price for it, but just email me. So thank you very much for watching this video. Be careful next week. It's going to be a volatile week, especially towards Wednesday, and considering that we are heading towards a Christmas break. Take it easy. Don't over leverage, don't over trade, and manage your risks. Thank you. Bye bye.